Trump's win is good news for savers. The U.S. election results are creating new opportunities for retirees and people with savings. If you have money set aside, now could be a great time to look at savings options. The interest rate on 10-year Treasury bonds is nearing last year's highs after the election, which gave Republicans control of the White House, Senate, and possibly the House of Representatives. Rates on inflation-protected U.S. government bonds are also at levels not seen since the 2008 financial crisis. With 10-year Treasury rates near 4.7% and inflation-protected bond rates around 2.3%, these options offer a safe way to earn income compared to the ups and downs of the stock market. You can buy these bonds directly through brokerages or invest in them via mutual funds or ETFs. However, there is a risk that interest rates could keep rising. Even so, today's rates are a big improvement from before the election and are much higher than the lows we saw in September. On news of the red wave election, the interest rate on 10-year Treasury bonds increased by 0.2 percentage points to 4.44%. Rates on inflation-protected TIPS bonds also reached a 4-month high of 2.25% for long-term bonds. Long-term rates have risen as markets consider the budget and economic impact of the election. The Treasury market, which was already under pressure, saw a historic rise in yields following Trump's victory, said Lawrence Gillum, a top fixed-income strategist at LPL Financial. The team at TD Securities noted, Treasury rates spiked after Trump's win as markets anticipated higher deficits and inflation. They expect renewed tax cuts and other policies to add about $5 trillion to deficits over the next 10 years. Some experts believe Trump's policies, like deporting many immigrants and adding tariffs on imports, could raise inflation by 1% next year and by another 0.3% in 2026. If the government needs to borrow more money, it may need to pay higher interest to attract lenders. This will push up borrowing costs. Trump supporters may hope tax cuts will be offset by reduced spending, but 2/3 of the federal budget is tied up in Social Security, Medicare, defense, interest on debt, and veterans' benefits. This limits how much spending can be cut. Some question whether Trump might adopt modern monetary theory, MMT, which suggests printing money to cover deficits. This idea has been championed by